Okay, guys, let's take a look at the market. Okay, so we had a beautiful setup this morning. Right here it is. We talked about this. So this is our third video of the day. The market is just getting cranked to the downside. Just briefly, in summation, we went over why the market's selling off. Powell had spoken about how the market's overvalued and how that the interest rates, he may not be aggressive on lowering interest rates. Well, that's put obviously pressure in the market. We knew that. Play the first video we did. I showed you how we got into this big trend mode today to the downside. The second video, I talked about how you use a larger and smaller Renko size to catch these two big shorts. Play the second video we did today. And on the first video, we were right here. We were right here coming up. And the first video, play it. And you'll see I talked before this happened. I said, hey, we're looking for a short bias in the market. We're looking for, it's inside the zone. We just need a yellow trigger entry candle. And we sure got it. We got it right there. We got it at the 63 3/4. This is a 1/135. You can use a smaller Renko. Like I said, you can even break this down to a 1/112. And it got even a better fill on the strategy or the indicator using it. And it got it right there at two levels. This is the break retest trade. I'll show you how to do that on the second video I did today. And there it is. Look at that short. And we were all over top of it. I did a video on this right before this came up. Right there is talking about it, how we're looking for that. And then I gave targets. So let's go over targets. So I showed you how to get into these type of setups. I showed you why these setups like to fire. Now let me show you how we get our targets. So if we come over our targets, I did a market profile video a couple days ago. Love market profile. Market profile to me is the best indicator out there since 1985 and 1994 because it's true order flow. It looks at all the market participation. So this morning we were up here at 8:30 or so. Where were we? Right here. I was talking about 8:30. I said we got rejected at this level. We got rejected at that level. So we talked about right here at 8:30 in the morning. We talked about how the bias was down because market profile at the time, if you played those videos, LVA was up here. It was, price was below it. So if you noticed, let's look at market profile before LVA shifted. LVA was actually up higher and the price was below it. So we had a bias to the downside. Play the first two videos we did today. But if you notice, look what price did. I typed in the room. Look at 62 rejection. 62 rejection when price was down here into the 50s, 53s, came right up to 62 rejection. That was the control point, and it got cranked down. Then I typed in the room, look for 66.50 resistance. Old support becomes new resistance. That was price profile and volume profile on top of each other, and it stopped literally almost to the tick. In fact, I think what the data bar shows, the high was 66.50 and a half, and I said 66.50 would be the resistance on the way back up. It just went two ticks higher, and it's all the way down to 34. It's fallen 16 S&P points off the rejected level. So let's just take a look at the opportunity with market profile. This rejected level, I said 62 would be the rejected level, and that's market profile telling me that off the break retest. And the high was 62 3/4. It only went three ticks higher. Market gets cranked all the way down from 62 3/4 down to 31. 30 S&P point drop. Then I said 60.50 be the next resistance. Old support becomes new resistance. Comes back up. Only goes up by two ticks above 66.50. And it gets cranked down all the way down right now at 32. I got this market going all the way down to the control point of 66.05. 66.05. Okay, so we know how to get targets now. We just use market profile. It only broke it by three ticks on the way up there and fell 30 S&P points. It only broke it by two ticks on our projection there, and it's already down to 32. So that's not my opinion. That's profile. That's all the market participants in the market. That's how valuable information this is on market profile. So we have our targets based upon what? Our previous market profile levels. So we got a big gap in the market. We're looking for it to come down to 66.05. So knowing that information this morning, if you play the first two videos that I did this morning on this trade before it even came up, this is our trade before it even started this morning on my first video saying, hey, we're getting ready for a short. So play that first video. I showed you why there's a hard downside bias with market profile and below my two liquidity grab zones. Like I said, if you're below my two liquidity grab zones, the 200 and 100, you don't just use these to use those for zones to buy and sell liquidity. It gives you your bias too. Look at that. It's not even retracing to any liquidity grab zone because it's a parabolic moves. Parabolic moves, you won't even come close to these 100 and 200 zones. So what do? If you're below both 100 and 200, there's pressure on the market. The pressure in the market started yesterday at 11 o'clock Eastern Standard Time. This is when the pressure started. So if you're a stock trader, if you're a futures trader, that's when it all started. That's when all this big sell-off started. It actually started on the S&P at 6,800 or 6,700. Sorry, 6708. It's 6631, but you had a big indication we're going lower because we're below low value area and below both these guys. So how do we time our entry? Very simply, sell the zones. Sold the zone, sold the zone, and the market. This is a 1-1-12. I showed how you use smaller Renko sizes and larger together. I'll show you do this break retest off the smaller 1-1-12. I love that setup. And then here's our standard one we use inside the room because the market responded very, very well.